Well, welcome back, everyone. The FOMC is now behind us. How did the market respond? Where are we going from here? Let's take a very quick look exactly at answering those questions. On chart right now, you've got the S&P 500 E-minis. You've got them going back to 2023 with the Champion Trend Pack, the ITP tools, TRP tools, Triple S tools, on the main chart, that is. Pushed up on screen, overlaying price. And what we're trying to identify from this overall move is, are we in a place where we're in a late stage move? The argument is self-answered. Yes, it's a late stage uptrend, but apparently we're trying to resume the uptrend and do so at a faster clip at the hard right edge of the screen. Now, if you think about markets and patterns, the reason things happen, at least in part, is a set of expectations are created. Now, in between those expectations and the tools that Rob's developed over decades, available to wealth charters through the Champion Trend Pack, if you've got that Ultimate Wealth Charts membership, you can see that on a day-over-day basis, the Champion Trend Pack Toolkit, green zone here, that's the Champion cross, Champion Trend, blue trail buy zone with a trail line. And then along the ride, there's a sequence of signals, 3 stages. Stage 1 is Champion Trend and Champion Cross, which is in play over here. Stage 2 involves a closed bar with wealth signal. If it's a transition from red to green, and it's finalized in stage 3 with at least 2 breakout forecasters, which are these dashes in a 3-bar radius, and then an absence of breakout forecasters. What that sequence tells us is where we're likely going to pull back to once it completes, and when we're in stage 2, the odds to get to stage 3 are dramatically higher. Where are we at the hard right edge? Well, we're in a resumption of an existing buy sequence of signals that carried its course through, but we remained outside of a couple of blips with the Champion Cross and Champion Trend in play. We then saw some marketplace indicators fire off, and that happened late last week. And of course, as we look at the last several days of trade, we recognize that that very, very dark blue dot, it's called range breaker. It is an indication that says we're resuming the sequence of signals. Combine that with this knowledge being on the main market chart and some targets up ahead with a lot of momentum still in place, I think that we're in a market that's not done the up, but it's going to have a very short-lived, let's say, experience above the clouds. Now I'm going to release the subchart here, and there's a few subchart indications that will add a little bit more definition to the market move. The FOMC didn't change much, didn't add enough dovish commentary, but we've seen the CPI data take another move down from this morning, and what do we know? Well, we've got a data point that moved slightly lower in terms of consumer inflation, and the reaction was a little outsized, wasn't it? Well, it oscillated throughout the day. We are closing higher, but we're in a marketplace that really needs a bigger kick in from major players that, yeah, growth's not great right now, but it's actually, quote unquote, more stable to look for a transition to the long bond, long duration rates. And we saw some of that last Monday. We saw some of that today, and we want to look for that kind of behavior or a concerted entry into and a more broad-based entry into stocks in North America and globally on a down dollar. We left the end of this day in a market risk-on state with expectations for a brief higher high that is likely to transition between tomorrow morning and the end of this week into a pause or, more likely, a turn down. Stay safe out there, folks. More insights coming to you in videos just like these. Big shout out to Stacy. Saw his class today. It was impressive. So great job there. And it was nice to see so many of you that are probably listening to this into his class this morning as well. Have a wonderful rest of your day, folks. Stay safe out there. We'll see you in videos just like these. And of course, thank you for your support. Bye for now.